G'day everyone and welcome to another CSBP Fertilisers Market Update. I'm Grey Johnston and joined as ever by our Sales, Strategy and Reliability Manager, Ben Sudlow. Hello Ben.
G'day Grey, how are you going today?
Very well thanks, and I'm heartened. We're recording this now. We've just seen a GEWA forecast come out which just continues to strengthen from month to month. We're looking at a sizable crop that will be very, hopefully and fingers crossed, harvested across Western Australia in the next couple of months. And of course, as we know, a sizable crop means nutrient removal. Ben, is there any way that people can replace those nutrients?
Well, I've got to say, Grey, working in the ag industry, when a big harvest is predicted and starts to come in through the system, yeah, it's uplifting for everyone. I know it's great for our customers. It means it's good for us. And yes, do have some of the answers for replacing nutrients. Fertiliser companies generally do, yes.
Brilliant. Well, we've started with bombshells early. If we move to the first of those nutrients, and nitrogen is generally where we start. We are in the sort of midst of an Indian tender. We often talk about the Indian tender when we have these discussions, and we're sort of in the midst of one of those processes at the moment. Can you update us on sort of what's happening there and the crystal ball on how that may play out?
Yeah, so last time tender results are out, prices respond. Often with these tenders, they exaggerate the price movement up or down one way or another. Last time that exaggerated price movement more substantially. There was 2 million tonnes sought. There's about 5.5 million tonnes that was thrown into the tender. China went back in and prices corrected relatively quickly back down again. Not long after that, India have come out again and they want another 2 million tonnes. That's for delivery through to mid-December this year. So let's put some scale to where we've been with urea. Urea a couple of months ago was at $520 a tonne. It's fallen since that time to about $400 a tonne, slightly less. Week to week, prices moved up in the last week by $16 a tonne. That was on one actual spot sale, and the results of this tender will set that for the next little while. So probably expectation will be around that 400, if not a little bit less. So we're down about $120 less than what we were a couple of months ago, and that's now reflecting in retail prices that are not dissimilar to what we were selling into the usage season of June, July, and into early August. I think it's the first time for some years that they've had 4 tenders in 4 months in a row, and each one of those tenders for 2 million tonnes. So they've really taken some volume. So the one this time, 2 million tonnes, the bids have been put out. There's been about 3.5 million tonnes allocated into that. Again, that counts for double and triple ups of traders selling the same volume. The awards for those tenders have not been released yet, so we're on Friday the 17th. The speculation around where those prices are is maybe slightly less than what the spot market is now, but not a lot less.
So that's clear on what's happening on urea globally. When we've talked about Flexi-N the last few months, we've talked about a sort of disconnect to the traditional premium that Flexi-N tends to trade at, which has been sort of driven, as I guess you say, by that relatively high urea pricing. And you've said probably one of two things is going to happen. Urea could drift down or Flexi-N could drift up to catch back up. It seems more likely that it's that sort of Flexi-N has stayed stable and urea has drifted down. Is that the way to read it?
Urea prices reflect a replacement cost nearly $1,000 a tonne. Flexi-N was at $685. It was the best valued in differential between the two we've ever seen. And now things urea's come down. It's probably sitting back into a level that's probably not dissimilar to history. And our prices now are slightly less than what they were back then as well, Grey.
And we're continuing to see good volume of Flexi-N committed for people getting ready to fill up their tanks through harvest and into January, February and March.
Exactly, Grey. And look, we've got some stuff coming in on ships. As per normal, we just got to keep the flow happening because there's a lot of tanks this year. That big harvest that we're just talking about, there's a lot of nitrogen that's gone on. It's gone out of tanks on the crop, and we've got to just keep the flow of product going back out. So when seeding hits next year, that there's plenty of stock to go in and make sure that your Flexi-N blends okay into the next year's crop.
So that's a good discussion of nitrogen. If we look at phosphates, that's clearly a nutrient that is going to be of particular interest this time of year. And we've been talking for a couple of years now doing these things, and it feels like phosphates have been creeping upwards all that period of time. There sort of seems to be the start of a correction happening in the market. Is that the best way to think about it?
Yeah, definitely. Last time we met, Grey, a couple of weeks ago, phosphates were teetering a little bit. They just moved down. It was sort of trickled down $3-5 a tonne week on week. And the last 2 weeks, it's probably started to accelerate that. I mean, week on week movement on DAP MAP was $16 a tonne. That's one of the biggest drops we've seen in some time. the scale of the difference, and we've spoken before about when the market prices reflects in retail pricing in WA. If you think about many of the suppliers here buying January, February pricing, maybe March pricing on shipments that reflect in retail pricing interceding 25, those prices were $160, $180 less than what they were when they got to the peak in September. And from mid-September through to October, they've fallen by between 40 and 60 US dollars a tonne. So we're up 180, we're now down 40 to 60. It's nice that we're starting to see somewhat of a correction on the downside. That said, there's still a whole lot of uncertainty that remains in this phosphate market right now. We spoke also about last time the implications of having China in or China out, and that's important with urea. It's also important with ammonium phosphates. The critical timing on their allocation of quotas for export closed on the 15th of October, so only 2 days ago. While prices have drifted down, the market a lot of markets are in the off-season, volume is becoming available. It's this still level of uncertainty about what China, if they're out and how much are they out by, what the quotas look for the next period. I think that's going to very much tell a direction for the next period. So at the moment, it looks like prices are drifting down. The impact of China right now over the next week, 2 weeks or month, I think is really going to determine, whether that be a further decline or maybe some support and some upwards of movement.
Yeah, so only history will be able to tell whether this is a temporary dip down and as you say, China's out and maybe pricing responds to that by going back up, or whether prices continue to drift downwards. And that's really why our suggestion would be the best opportunity for farmers is to close out some of that risk by closing out some of your volumes and locking in some pricing now. CSBP's in the position to support people doing that.
They are great. Right now we've got our granulation plant starting to crank up to make next year's Agras and K-Tills and Macro Pros back end of October, and it runs all the way through till seeding and beyond, which means we've got product coming, it's arriving. The market in general, and I talk about West Coast Australia and broadly Australia, they start shipping ammonium phosphates October, November, and then all the way through till Feb and March. So the market's starting to price some stuff. You never know where the price is going to go. It's nice to see the phosphates at the moment have sort of come off the peaks, and the affordability, the publications are talking about the change in the affordability of phosphates for the first time. Against grain prices in key markets, phosphates are now becoming more affordable, clearly, than what they were even a month or so ago. We'd expect then that, like we would, that maybe between now and Christmas, that 10-15% of volume might be considered a sensible volume to put away, unless we see some considerable movements in the market, either direction, up or down in that time.
And moving then from phosphates to potash, because we know that our Grand Plant's not just producing those phosphate products, with our NPK range is going to get made and ready to commit. We've got product there available, and is there any insight into how people should be thinking about the potash component of that pricing?
We don't expect a great deal of change in the base commodity price for potash. In the near term, there's no signals that's going to change dramatically in one way or another. It feels to me at the moment it's more as much about the variability in the exchange rate than it is about the changes in the commodity price itself. And we've seen a bit of that change in the last couple of weeks quite dramatically. So I think potash prices, again, are relatively affordable relative to phosphate. The key thing with potash now is probably that potash portion that we see as a manufacturing component of NPKs. And I think if there's anything, if farmers were wanting to take a cropping compound now in terms of hedging some price, probably something with a potassium in it, where that actually looks like it's going to be pretty stable, might be something that helps manage that risk around phosphate movements.
So we've gone through N, we've gone through P, we've gone through K. All of those commodities are impacted, and we've talked often over the last couple of years about geopolitical events, and probably remiss of us to get through 10 minutes of this so far without talking about peace in the Middle East. But it sort of, I would have expected kind of an announcement of peace in the Middle East would result in some risk premiums coming out of markets. It doesn't quite seem like markets have responded like that in the last couple of weeks.
No, you're absolutely right, Graham. I mean, we still have expect to have some issues with flow of ships through the Red Sea, affecting product out of Europe and out of anywhere up at the top of the Red Sea. That's still, we expect a premium around those locations in terms of insurance premium and shipping problems. The general commodity price movement has been somewhat ambivalent to the movements of what's happened geopolitically, Gray.
So Ben, we've covered off there on N, P, K, geopolitics. Is there anything else we've missed in our discussion today?
Well, I didn't miss anything, Gray. You did. You were supposed to talk something about Flexi-N, manufacturing, storage. Please, what did you miss?
You're right, Ben. It's remiss of me. We often talk about Flexi-N. It's clearly very important to us here at CSBP, and we're really excited. We've got some good investments that we're making and we'll be announcing shortly in relation to our Flexi-N storage and our capability to provide even better reliability to farmers throughout the West Australian growing regions. So keep your eyes peeled and stay in touch with all the various ways you can keep connected with CSBP on all the different platforms, and we'll be making those announcements shortly. So some exciting news in relation to our Flexi-N reliability. On that bombshell, then we'll say that that's enough for the day. Thank you, Ben, for joining us.
Thanks, Gray.
And thank you all out there in Fertiliser World. We'll see you again soon. Bye bye.
This podcast is provided as general information only. The content of this podcast is not a recommendation and has been prepared without taking your objectives or circumstances into account. Before acting on the content of this, you should consider its appropriateness to your circumstances and seek independent advice.